All right, so we're going to have a little fun here and we're going to draw on GREE. With technical analysis, as I always say, have fun with it. Don't take it too seriously. Technical analysis is more of an art form. It's not a science. It's all in the way you look at the chart. Just like art, everybody looks at art differently, right? Some people see beauty in the what is the Mona Lisa. Some people don't see anything at all. Art speaks to people. A great tool to use with technical analysis is Fibonacci retracements. Have fun with Fibonacci retracements. When I was just starting out, I would always use Fibonacci retracements. And for you newer people, it actually helps you in understanding these charts, measuring moves, whether it be from the low to the high, high to the low. You're understanding and seeing how these stocks like to move in stages up and down. So let's draw out GREE here. We'll start from this low up to the high. There's multiple different ways you can use Fibonacci retracements and the Fibonacci tools. There's many of them. We got Fibonacci arcs, retracements, fans. There's Fibonacci projections. I've never gotten too much into projections. It's pretty much the same thing as retracements. It's just forecasting the future for you. We measured from the low up to the high here. 50% technically is not a Fibonacci number. They throw it in there though, because majority of investors always look for at least a 50% retracement of a move. It just makes a lot of sense to include it. But you got the golden ratio of Fibonacci, which is 61.8. But in this case, with GREE, from the high up here, this retraced all the way down 50% of its move here. So from the bottom to the top, this stock pulled back 50% and retraced right here. That's a good level, a really good level. A lot of people look for retracements like that for continuation. So from 2450, retraced 50%, got a nice move up all the way up here to $27. Now, there's a few ways you can look at this too. One, you could draw a line connecting all of your lower highs. I love doing this, especially on multiple different time frames. It's telling me a stock is in a downtrend. Don't try to force trades and predict when a stock's going to reverse. Let it show you and prove to you that it's going to reverse, break that downtrend, and go from there. You could see just by, there's multiple ways you can look at this and make strategies from this. There's many different ways you can trade, many different ways. One, you can wait for the trend to get at the very end and break over, and you could take a trade and make a scalp just by trading a trend break like that. Or you can wait for the stock to come back. Majority of the time, you'll see stocks, if you extend that line out, if they break over that, they'll pull back and they'll hug that trend line as support. It could tick lower and lower and lower, but still hold that trend line. We got a nice, pretty much triple bottom at 2450s here. It broke over our trend line. It's pulled back to that 50%. It's holding just above that trend line for support. From there, runs right back up to 26. So two opportunities. One there, one there. This stock gets a nice pullback here. Now it gets up over that resistance right here. Now it's holding up as support. That could be a potential entry right there. Now that resistance is holding as support, and the stock rips up to this level at 27. And remember back to when I say you should have fun with Fibonacci retracements. Now let's further dive into this. I'm going to delete this retracement right there. Now I'm going to measure a move from the high right here down to the low right here, right? So I'm measuring this high right there down to this low right here. That's the move I'm measuring right here. And you can see this stock bounced right up to what level? 50%, and the Fibonacci ratio there at 61.8. There's our 50%. There's our 61 0.8, the golden ratio. So you see there's multiple different ways you guys can use Fibonacci. This is a system that I've developed myself. I didn't learn this from anybody. Take it as you please, use it, do your own thing with it. All in the way you guys look at the market. From this, you guys could see something that I don't and develop your own little way of looking at these charts. So now that it bounced, and that's what it did, it bounced. It already made its high up here. It retraced back down. All this did was bounce right there. Now you can also get out your trend line again, and now you can connect the lower highs. We know support is right here at 2450. We see a lot of stocks, they like to form a lot of triangles, right? So as this stock comes down, pushes up, play the triangle. Anytime it comes down to the bottom of the trend here, that's where you should be buying. And then anytime it comes up to that top trend line, that's when you should be selling. You could do this on multiple time frames. Remember, the bigger the time frame, the bigger the move. So now that we did that retracement with that, now let's take a look at Fibonacci fan. Fans, you can use a few different ways. Measure from the low up to the high. And it's all in the way you look at the chart. Remember that. Now, with these lines here, be looking to play these lines as the stock is moving up and down. See, when the stock topped out up here, it pulled down and it was in and out of that line. And then it fell right down to this next line here. It was in and out of that next line. Falls right down to the next line, hovering just above it. Spikes up, finding resistance just above that line there. Then it comes right down to it. Hugs down just below it, right back up to it. Pretty crazy how the charts form to this fan, right? And it moves with it in a way. So have fun with this. Play around with it. This will actually help you in fully understanding how stocks like to move up and down in stages, like I've said. You can measure from the low to the high. You can measure from the high down to the low right here. Get my lines back out. See how it's hugging it every time right here? Literally, every single time. So the stock hugs it all right here, pops up, finds resistance at that line, pops up, moves its way up, gets all the way up here to the 50% line, finds resistance at it. It's hugging this bottom line, pushes up. It's pretty fascinating how Fibonacci is correlated with these charts and price action. Fibonacci is super popular with a lot of traders. It's almost like it's a self-fulfilling prophecy. So that's the fan. And then we have the Fibonacci arcs. And this one draws circles out like that. Measure down from the low to the high. And you see how the stock falls all the way down. Then it hugs this as that circle there as resistance, falls down to the next line. Then now it's finding resistance at that circle. I don't use the circles too much, but some of you guys may fall in love with this. It's all in the way you look at the chart. Remember that. Have fun with these Fibonacci tools. All you're doing is measuring from lows to highs or from highs to lows. There really is no... You're going to run into people out there that say this is the correct way to use it. There's no, if somebody's teaching you this other way, they're wrong. The way I look at it, have fun with it. It's a tool to measure moves. Low to high, high to low. Nothing's technical. I mean, it's in the name, technical analysis, but have fun with it. It's not a science. It's art. Or you measure from the high to the low here. See how this worked? It's way all the way up to the what? The 61.8. This one right here. This line right there. It ran all the way up. If you've measured from the high here down to the low right there, the stock grinded all the way up to that 61.8. That's the golden ratio. That and the 50% are the two most important ratios. Even though 50% isn't in the Fibonacci sequence, it's still a very popular number, like I've stated. That's why they include it.